For more on what is next for Meta and Alphabet, we do have a guest. Evercore ISI's Mark Mahaney. Mark, always great to see you.
Hey, Melissa.
Meta can spend all it wants because it's showing investors a return on that investment. When are we going to see similar sort of metrics from Google to sort of allay investors' concerns about this big splurge that they're forecasting for this year?
Well, the funny truth here is that they both have had rising return on invested capital over the last 2 years. They're both doing about 29% return on invested capital. So if you're looking for ROAI, there's evidence. I think there's a little of this is just it's just PR. It's, Meta goes out of its way. They give this guidance. You know what's coming. I think they were very clear with the street that they were going to spend aggressively on CapEx. And so the street wasn't as shocked. Google is increased. It's always consistently a black box. I give them credit for giving us their CapEx guidance for the full year, but that was an outlier, and therefore the street was caught, disappointed and by surprise. Also, the cloud numbers were a little disappointing too, but. And I do think part of it is that I think Meta actually does a great job of communicating to investors what its investments are going to be, and it's giving you great revenue growth, 2x that of Google. All that said, right here, I probably would prefer Google. I just think there's more room for the narrative to change, more room for the multiple to go up. I like both assets, but I have a slight preference for Google.
All right. When Mark Zuckerberg posted on his blog that they were going to increase CapEx by more than what the street was expecting, that was a surprise. That was announcing the news, and the reaction was a positive one, and yet Alphabet will announce the news, and the reaction was a negative one. So in terms of the PR problem that Alphabet, or the messaging issue, how does it fix that? Because if it's as simple as that, and granted there's still a DOJ investigation, there's some other things going on with the Google story that investors might not like, but when it comes to the message, how do they fix that? Because that seems like a highly fixable thing if the fundamentals are really there.
Well, so Melissa, you're pointing out there's actually some other serious overhangs on Google. So there is the DOJ overhang. There's still this kind of ChatGPT-esque AI search, this undermined search, Meta AI search. There's more worries about Google's position, which it dominates in core search, and maybe that gets disrupted in the future. And then it just hasn't been as much, I would argue, kind of cost discipline out of Google. Like Mark Zuckerberg made famous the term, year of efficiency, and then he turned it into years of efficiency, to his credit. And that's why those margins have gapped up. And the potential is there for Google to do the same thing. They just haven't done it. So that's why those three are sort of overhangs on Google stock. And that's why it trades 4, 5, 6 times at a lower multiple than Meta. That's why Google trades at a lower multiple. But there's a chance for this to turn, because I think the odds of a settlement between Google and the DOJ have gone up materially over the last 2 months. Right or wrong, I think that's absolutely true. The odds have gone up. And then I think Google is showing that its AI, that AI is actually benefiting its search and YouTube businesses. Those growth rates are stronger than people thought. So they just need to kind of clear out some of the wood in terms of getting this cloud business to sort of reaccelerate a little bit. They said it was a supply constraint. If that's true, show it to us and give us some revenue growth acceleration in your cloud segment this next year. These things come together, and all of a sudden you go from Google at 21 times earnings, it gaps up to 25 times earnings. Whereas for me, Meta's at 25 times earnings, maybe goes a little bit higher, but not dramatically higher.